What if I told you that one of the richest men in the history of the world started his journey by delivering newspapers in the cold Nebraska mornings before most kids had even eaten breakfast? No inheritance, no powerful connections, no shortcut, just a boy with an obsession and a mind that saw money differently than anyone around him. This is the story of Warren Edward Buffett, the Oracle of Omaha, a man who turned pocket change into $100 billion, not by luck, but by patience, discipline, and an unshakable belief in one simple idea. Let's go back to the beginning. August 30th, 1930, Omaha, Nebraska. Warren Buffett is born into a middle-class family during one of the darkest economic periods in American history, the Great Depression. His father, Howard Buffett, was a stockbroker turned congressman. And from a very young age, little Warren was watching, learning, absorbing. At age 6, he bought 6 packs of Coca-Cola from his grandfather's grocery store for 25 cents and sold them individually for 5 cents each. That's a 20% profit margin. At 6 years old. By 11, he had already made his first stock purchase, 3 shares of Citi Service Preferred at $38 each. He sold them shortly after at a small profit, only to watch the stock skyrocket to $200. That early lesson burned itself into his mind. Patience is not just a virtue, it is a strategy. At 13, while delivering the Washington Post and the Times-Herald on his bicycle, he filed his very first tax return and deducted his watch and bicycle as business expenses. 13 years old. Tax return. Business deductions. This was not a normal child. At 17, Buffett read a book that would change everything. A book called The Intelligent Investor, written by a Columbia professor named Benjamin Graham. The book introduced a radical idea. Don't try to predict the market. Instead, look for companies whose true value is far greater than their current stock price. Buy them. Hold them. Let time do the work. Buffett described reading that book as like seeing the light. He applied to Columbia Business School specifically to study under Graham, and he got in. Graham became his mentor, his professor, and eventually his employer. Under Graham, Buffett sharpened his craft, learning to read financial statements the way others read novels, searching for hidden value in overlooked companies. But here's where things get interesting. When Graham retired and closed his fund, he offered Buffett a spot. Buffett turned it down. He had other plans, bigger ones. In 1956, at just 25 years old, Warren Buffett returned to Omaha with $174,000 of his own savings and started the Buffett Partnership. He pooled money from family and close friends. His personal investment, just $100. But his results? Extraordinary. While the stock market averaged returns of around 11% per year, Buffett's partnership averaged over 29% annually. He didn't just beat the market, he lapped it. By 1962, he had already become a millionaire. And he was only 31. Then came the decision that defined the next 60 years of his life. He noticed a struggling New England textile company trading below its liquidation value. A classic Graham-style, undervalued stock. Its name? Berkshire Hathaway. Buffett began quietly buying shares. Then more. Until, in 1965, he took control of the company entirely. The textile business eventually failed. Buffett himself later called buying it the worst trade I ever made. But he did something genius with the cash it generated. He redirected every single dollar into insurance companies, newspapers, and stocks. He had just built himself a money machine. Through the 1970s and 80s, while Wall Street was chasing trends and getting burned, Buffett was doing something unfashionable. He was being boring. On purpose. He bought See's Candies in 1972, Coca-Cola stock in 1988, American Express, The Washington Post, Geico Insurance, Gillette. His philosophy was disarmingly simple. Find great businesses, run by honest people, at fair prices, and then do almost nothing. Our favorite holding period, he once said, is forever. When the dot-com bubble exploded in the late 1990s, everyone laughed at Buffett for not investing in tech stocks. Then the bubble burst, and Berkshire Hathaway sailed through unharmed. When the 2008 financial crisis hit and banks were collapsing, Buffett invested $5 billion in Goldman Sachs, earning billions in returns as the market recovered. He didn't just survive every crash. He profited from them. Because while everyone else was panicking, Warren Buffett was shopping. What truly separates Warren Buffett isn't just intelligence, it's philosophy. He still lives in the same house in Omaha that he bought in 1958 for $31,500. He drives himself to work. He eats McDonald's for breakfast. He reads 500 pages a day. While other billionaires were buying yachts and chasing headlines, Buffett was sitting quietly in his office, reading, thinking, and compounding. The stock market is a device for transferring money from the impatient to the patient, he once wrote. And here is perhaps the most astonishing fact of his entire story. 99% of Warren Buffett's net worth was built after his 50th birthday. Not because he suddenly got smarter, but because compound interest had finally had enough time to work. He understood something most people never grasp, that time, not timing, is the greatest wealth-building tool in existence. Today, Berkshire Hathaway is one of the most valuable companies on earth, a conglomerate with over 60 businesses employing more than 360,000 people worldwide. Warren Buffett's net worth has crossed $130 billion. Yet he has pledged to give away more than 99% of it, most of it to the Bill and Melinda Gates Foundation. "I won the ovarian lottery," he says, referring to the luck of being born in America with the talent he has. And he intends to give most of it back. A man who spent his childhood delivering newspapers is now giving away one of the largest fortunes ever assembled in human history. The story of Warren Buffett is not really about stocks. It's not about Wall Street or billion-dollar deals. It's about a kid who started early, thought differently, stayed disciplined, and played the longest game imaginable. It's a reminder that wealth is not built overnight. It is built over a lifetime, one patient decision at a time. The Oracle of Omaha didn't inherit billions. He compounded them. And maybe, just maybe, the most powerful investment you can make today is in yourself.